Hi, I'm Mark King, Investment Editor at Columbia Threadneedle Investments. Joining me today is Mark Burgess, Chief Investment Officer, EMEA and Global Head of Equities, and we're going to talk through the results of the UK referendum on EU membership. The votes are in, of course, and the UK has chosen to leave the EU. So Mark, what's your immediate thoughts on the vote?
Well, this is a surprise to financial markets. The polls had been fairly neck and neck in the run-up to this, with a gentle swing to Brexit, I think, over the last week. But the bookmakers had been very significantly expecting us to stay in. So markets had been relatively calm and strong over the last few days. And equities were strong in the last couple of days particularly. So not surprisingly, equity markets are going to be quite weak today. Sterling assets more broadly be quite weak, and I think markets are going to have to digest this news and think about what it means more broadly for global investors.
And how long do you see this volatility lasting? Is it a short-term thing or...?
No, unfortunately, I don't think it is a short-term thing. The thing that markets hate most is uncertainty. The Prime Minister has resigned, so we've got political uncertainty thrown into on top of economic uncertainty as well. And we don't know what shape the UK economic arrangement with Europe is going to take. And that's going to take quite some time to negotiate, and we're going to have to negotiate clearly bilateral trade agreements with the rest of the world as well. I think the real issue is about what it means for Europe. I think we're likely to see calls for referendums in some of the continental European countries and members of the Eurozone and the single currency. And I think the market is going to worry about the implications of that. And so I think the uncertainty, unfortunately, is with us for a while, and heightened levels of volatility as well.
Because the negotiations will take 2 years at least, won't they?
They will, yes.
Longer term, a number of challenges to global growth remain, of course, the global headwinds that we've spoken about in the past. Can you just remind us what they are? And they haven't gone away, have they?
No, we're a significant trading nation, and clearly what the nature of our trading arrangements with the rest of the world looks like is going to be uncertain, and I think that will naturally slow activity. A number of international companies have headquartered their European operations in this country as an easy access to the European market, and I think some of those companies will reconsider that decision. That's not something that can be overturned quickly or easily, but I think we'll see a number of international companies probably move their European headquarters back to Europe, and all of this will act as a dampener on UK growth. I think the uncertainty as well with regards to what it means for Europe will also slow European economic activity. So unequivocally, this is a negative event for global GDP.
And what is Columbia Threadneedle Investments positioning its funds? What's going on?
We've tried to be relatively neutral coming into this event. It's been very difficult to call. Our equity portfolios are relatively defensively positioned. We're quite underweight European financials, and I think that's where the pressure is going to be felt most. I don't think the UK bank sector is going to be in a great place, but I think European banks will be under some pressure. So we've been relatively defensively positioned. Our multi-asset portfolios have had, again, relatively defensively positioned. And I think one of the great things about active management is that you can make these sorts of moves to take advantage of the likely market movement. So I think, clearly this is a day when absolute levels of markets are going to go down, but I think relatively speaking, our clients' portfolios will be in an okay place.
So what's the final message for investors amid this volatility?
That you're in good hands, that we've been thinking about this for a long time, that we're well positioned, that we're going to be putting clients' interests at the forefront of our minds, that market volatility is going to be quite heightened, and that will provide us with opportunities to reshape portfolios as and when we see those opportunities offering value, and that we're going to be looking after our clients.
Mark, thanks very much.
Thank you.